Welcome to the next module. In this module, I'll talk about risk management and what that looks like when it comes to options. So, for starters, when you are working with options, options are obviously extremely risky compared to stocks. Um, I wouldn't say welcome to the next module. In this module, I'll go over risk management when it comes to options and what that looks like. So, just for starters, as you can tell, options are riskier than traditional stocks are. As traders, we try our best to mitigate risk and then also capture as much upside as possible. But when it comes to options, it's very important that you are setting your you have your position size for options like in your head. You already know what you're going to risk per trade, and a good starting point, if you are looking at your entire portfolio in general, you should never have more than 10% of your portfolio in options. That's just my rule. That's the one that I follow pretty closely and religiously. I have my long-term investments that I'm just holding in SPY, QQQ, and different safe ETFs. But when it comes to options trading, I only allocate about 10% of my portfolio to options at a time. And from there, I say we go into my options portfolio. From my options portfolio, I'm not instantly taking everything and I'm putting it in options, right? What I'm doing is I'm usually splitting up the money and I'm giving it a different job. So with some options, I'll go leaps. Some options, I will use the wheel strategy. It just depends on, what I think looks good at the time. But I would never recommend putting more than 10% of that 10% into a trade. So say your options account is $10,000. I would recommend only using about $1,000 of it for any given position at any given time. So if you're going to do a leap option, go ahead and do you can go up to like 20%. You can do something that's like $2,000, but I wouldn't recommend putting your entire $10,000 into a leaps option if that's your entire options portfolio. I know that some leaps can get extremely expensive, and that's why you have to allocate for your budget and you have to use strategies that you can use for your budget when it comes to options and slowly grow that account. Don't feel discouraged if you can't afford a leap. Just trade what you can afford, maybe wait for price to come down and then start looking at some options, right? Something else is never put all of your eggs in one basket. I kind of just said that, but if you have a $10,000 option account, you're not going to put 50% of it into one option, right? You're just kind of spread it out amongst, a couple different things, different strategies, different stocks. That way you can, at least have some sort of diversification. But something else is if you can't afford to lose it, you probably should never trade with it, right? If you can't afford to lose that $10,000, that 10% that you're allocating to it, assuming you have a $100,000 account, obviously, you know, if you have a smaller account, you can this percentage will probably be higher. If you have a overall investing, 10% should probably be options. You can probably go a little bit more if you do have a smaller account, but this is just so that you do not blow all of your money, because that's not what the goal is. The goal isn't to get rich quick. The goal is to slowly grow over time, and eventually that options account is going to be nuts, because options are extremely, you can make a ton of money doing options, right? Using options and trading them, especially if you know them really well. You're not going to take your full portfolio and just go into options. So the goal is just to slowly grow over time and, do what feels comfortable for you. That's what I do. This is how I trade my options. I'm just telling you what works for me. But if you have a higher risk tolerance, then by all means trade with more of your money. But I would never recommend trading with anything more than you're willing to lose. Like that $10,000, if I lost it in options, I'd be okay. I would go on, I would live another day, I'd be perfectly fine. I probably wouldn't even think about it twice. But if for you that's $100,000, you wouldn't think about it twice, then go ahead and trade options with $100,000. Like, why not? Trade it with $1,000,000 if it's nothing to you. Um, Everybody has different budgets, everybody has different risk tolerance. So it's something for you to figure out and to think about. It's more of like an internal thing. Is like, oh dang, I just bought this leap and it's going to cost me this much, and it's a huge part of my portfolio, and you have to think about it. You probably shouldn't get into it. So just don't trade with more than you're willing to lose. That's just the biggest thing that I've heard from day one over and over and over again, is just to not trade with more than you're willing to lose, because if you do lose and you're trading with more than you're willing to lose, it's going to be pretty upsetting. I did this early in the beginning. Like, I've made these mistakes before, but now I just know, so it doesn't hurt me when the market does go down. If everything went to zero, like, it wouldn't hurt me as much because I have my risk tolerance set. I'm pretty risk averse. 10% is a little bit small. I'm not trading with an insanely huge account. It's totally up to you. It's what you set, but never trade with more than you're willing to lose. Just, you should always be able to sleep at night. You should always feel comfortable in the trade. You should never go to bed at night thinking about it. Like, if you're losing sleep over it, you should exit the trade immediately and just restructure your account. Like, there's no reason to stress over this. It's never that deep. So that's what I would say for position sizing when it comes to options, is super important. I can't stress this enough. Never trade with more than you're willing to lose. In the beginning, it's super important that you're setting your max risk per trade. So I talked about it a little bit before, but if your options is 10% of your total account, and then you say, okay, you know what, 10% is what, like, inside of that 10%, 10% is going to be allocated towards a leap option, right? Then you need to go in knowing exactly what your max risk is going to be. If you're like, if this went down 50%, I'm going to close my position. Like, you need to set that in advance, because the market is, like, if you don't set your max risk per trade, the market's going to set it for you. You know what I mean? Like, you're going to have those downturns and you'll be like, oh crap, like, I was not expecting it to go down this much. Like, this hurts. You know what I mean? So you need to set that beforehand. You need to know in your head, this is when I'm getting in, this is when I'm getting out, and have it clearly defined. It should be written on paper before you even take the trade. Like, you should know it and be like, for this position, I'm getting in here, I'm getting out here. If it goes my way, I'm getting out here, and if it doesn't go my way, I'm getting out here. It's better to cut your losses before you lose any more, and then take your profits, because you never know what could happen, right? You could be up a ton, and then something could happen. Um, the president could say something, Jerome Powell could say something, and then the market just tanks. You know what I mean? Or whoever the Fed chair is at the time. But it's super important that you're doing that and just saying, hey, this is how much I'm going to lose on this if it doesn't go my way, and then this is my profit, and this is where I'm taking profit. So super important that you do that beforehand. If you're going to be trading anything, it's just important that you do that in general as a good rule of thumb, because if you don't, it will hurt you. And I'm just going to keep stressing this. This is why there's a whole module for it, is because people don't do this in the beginning. Like, and it's pretty frustrating when people are like, oh my God, I lost this much. I lost this much. I'm so sad. I quit trading because this happened. You know, it always sucks as a trader when you see other traders quit, because you know that, like, they're not setting their max risk per trade, or they, like, aren't following the rules. Like, if you make clear rules in the beginning, you just have to follow them. Like, it's it's harder when you're actually trading and you're like looking at it, you're like, well, what if it goes up? What if it goes up from here? Like, what if it goes down and then it goes up? Like, what if I miss out? You know, you can't think that way, right? You just have to cut your losses. You're going to have losses, but you're also going to have wins too. If you have clearly defined rules that you follow, it will be easier for you to craft those over time, and That's how you become a better trader. It's not by gambling, because if you don't have a plan, you're literally gambling your money away. So just have a plan on your entry, your exit, and then how much you're going to risk per trade. As you probably already know, 90% of traders lose money in the market, and it's important for you to understand why so that you don't make the same mistakes. So the first reason is traders over leverage. So a lot of the times traders will go in over their head, they will use margin, or they will not set their max risk per trade. So that's the first reason. It's a big one. And if you want longevity and you want to make consistent profits over time, you just need to make sure you are setting your max risk per trade and you're not over leveraging yourself. And um, off of that, it's just ignoring risk management. A lot of traders in general do not manage the risk. I think every single trade you should know your entry, your exit, and why you're getting into the trade before you even take the trade. A lot of the times when I trade leaps options, right, I literally say the premium is what I'm willing to lose. Like, I'm going to let the option die nobly. It's either going to um, go up significantly because it's such a long time frame. Um, and, sometimes I do let them die nobly. If I am planning on swing trading it, or if it's a stock I don't really want to hold for an extended period of time, say I'm looking for a 30 to 45 day move, I am going to set my max risk. I'm going to say, this is where I want to take profit, this is where I want to enter, and then this is where I'm going to set my stop loss. And it's super important that you manage your risk um, before you even enter the trade. So it has nothing to do with after you're in the trade. It's literally all before you even take the trade. It's just making sure that you're managing your risk ahead of time. The third trap that a lot of traders fall into is just chasing quick profits. So I see this a lot with people is they'll want to day trade or they'll want to be active because trading can be exciting. For a lot of people, it's gambling, and that's why so many people lose is because they're literally gambling. They get a high from buying and selling and seeing the dollars go up and go down. But you kind of have to think of trading as like a business because that's what it is, right? Trading is fun, but you're not gambling. And a lot of people treat it like gambling. So just chasing like the quick profits, um, buying and selling, you're not really learning anything, right? You're just taking trades, essentially just gambling. So that's probably one of the biggest things is just chasing the quick profits. Um, and then especially with options, like if you're trading options that have a short-term expiration, you have to be extremely careful because I talked about theta decay, and that's why so many people get burned trading options. Um, I was talking to a couple people the other day, and they're like, for the life of me, I cannot trade options, and a lot of it's because they're getting theta, like they are literally getting screwed over by theta, like. That's one of the biggest things, but because they're chasing quick profits, they're trading on a short time horizon. They're looking to make these huge moves, and it's just an adrenaline rush. So that's the third reason. And then the fourth thing is just not understanding the options pricing. So what makes up the price of the option? If you want to go on your own, you can look up what makes the price of an option, and it just uses the Black-Scholes model. But all of it together essentially comes up with the price of the option. And if you don't understand why an option is priced the way that it is with intrinsic value, extrinsic value, how time decay works, you will get screwed over. Like, no doubt, if you didn't pay attention to any of the videos that I post, like that I have in this course, go back and watch them no matter how many times it takes. Go find other resources, watch other YouTubers, just like consume as much content as you possibly can and like learn it like the back of your hand, because if you don't, you're going to get screwed over. I'm not saying that to discourage you. I'm just saying that before you even take a trade, you should know what that stuff is. It's not super complicated. You can learn it in a day or 2 days, but it's super important that you do know before you get into that trade. And then the last one is going to be emotional trading. If you're trading based off of emotions, it's going to be one roller coaster for you because you're going to be up one day and you're going to be so happy. You're going to be like, oh my God, I made a couple $1,000s today, whatever. But then the next day you'll lose double. Like I see it happen all the time. And then you try and revenge trade. You're like, oh my God, I took a loss, but I know that I can make it back. And then you just keep on like literally over trading, and it's kind of like a vicious cycle that people fall into, is essentially over trading. So those are the 5 main reasons that options traders lose money: is over leveraging, ignoring the risk management, quick profit, not understanding why an option moves the way that it does, and then also emotional trading is probably the biggest one. So just make sure that you guys are learning from other people's mistakes so that you aren't the 90% that loses money and you're the 10% that makes a ton of money. The next part of risk management is cutting your losses early, and this kind of goes along with what I was saying before, whereas you need to know exactly where your entry, your exit, and where your entry and exits are when you're taking a trade so that you can cut your losses, because I've done it. I have friends that have done it. Most traders will probably experience it. It's just not cutting your losses early and literally just holding the bag and hoping and praying that the stock is going to go up or that your option contract is going to go up, and it just doesn't. You know, like it's super, super common to not cut losses, especially sometimes with the way that I trade with like leaps options. I'll hold them until expiration. If they're not going my way, I will literally let them die nobly. Uh, but like if that's my plan, that's my plan, and I set it beforehand, and that's my risk tolerance. But some trades I don't always do that. So it's super important to just make sure that you're cutting your losses early, especially if you're in a bad trade, or it might not even be an options trade, right? Just in general, as a trader, know when you're going to enter and know when you're going to exit, and have a clear plan from the beginning so that you never even run into this issue. And it either hits your take profit or it hits your stop loss, you know what I mean? And you just stay true to your strategy, and you don't you don't fall off from it. Some people like to move their stop loss even lower and be like, I know it's going to go up. I know it's going to go up. And then next thing you know, they're down significantly more than what they even anticipated. And now their whole strategy is messed up. So just cut your losses early. Put a clear plan in place. Um, like set it and literally forget it, and wait until it either hits take profit or stop loss. Like that's the best way that I can do it. And then just always make sure that your stop loss is at a manageable place, like something that you can mentally be like, okay, I'm cool losing this. Don't put it too close to where you enter so that you get stopped out. Like make sure you're being smart with it, like don't just hold a bag just hoping and praying that it goes up, because half the time it's not going to, especially in options. One of the biggest things that beginners struggle with when it comes to risk management is FOMO and overtrading. I talked about overtrading a little bit, and I mean, that's pretty self explanatory, just getting in and out of trades and just continuously trying to make profits, and then you take a loss and then thinking that, oh my god, I need to get back, so then you just overtrade and you take even more losses. So that's overtrading. It's pretty self-explanatory, but the biggest one that has gotten me is FOMO. Have you ever had your friend come up to you and be like, bro, you need to get into this, or um, you need to take this trade, or me and my buddies are doing this, or you see on social media that people are doing a certain thing. It could be a different trading strategy. It could be a different business. It could be, I don't know, it could be a different stock. It could be, I don't know, I trade options, but say my boy's doing really well with futures or something like that. And I'm like, oh my God, I have a fear of missing out. That's what FOMO stands for, is fear of missing out. And this is probably one of the biggest things in trading, is people just get FOMO. Like you see other people doing well, and then you're like, dang, maybe my strategy isn't working as well, so let me switch. And that's not how it works. Like with trading, you have to stick with it like for a long period of time. Like it's probably going to be longer than you think, but it's going to pay off significantly. Um, Especially when it comes to if you're going to do options trading, learn options trading, right? Stick with it for a little bit. Like focus on that. Don't get FOMO and try and trade a different trade something else, because that's when you're going to start losing money, is when you get FOMO. So that's probably the biggest thing when it comes to being a trader, is just getting FOMO and not getting distracted and sticking with your original plan. I literally cannot stress that enough. It's probably one of the biggest things that has like impacted me, because I see friends trading crypto, I see them doing this, and then I have my time split over here, over here, over here, over here, and over here, and it's a huge problem for me. I struggle with this every single day, but like I really just want to stress in this that like you cannot get FOMO when you're trading, especially if like it doesn't follow your plan. If I see my friend trading, um, I don't know, American Airlines, right? And I've never traded American Airlines. I don't know how it moves, or they're trading, I don't know, Taiwanese semiconductors, and they're like, bro, you need to get in this. Like, yes, you can do your due diligence and you can do your research, and if it fits your criteria, then go ahead. But if you know nothing about it, then why are you spending your time trading it? Like, it genuinely makes no sense. Like, focus on what you know best and just get really, really, really good at that. And that's how most traders become successful, is they know what type of trading they're doing, they have a specific strategy, and then they have the specific tickers, stocks, um, or indexes that they trade, and they just really stick with those. So that's what I have to say about FOMO. Very, very important. Just make sure you pick one thing and you just stick with it. You go all in and you learn a whole bunch about it, and like you really lock in on that. And you just don't deviate from the path, because there's just way too many distractions out there, and next thing you know, you're building half built bridges is what I call it. You never even build the full bridge. You literally build a half built bridge, you stop, and then like you just have a ton of half built bridges. So you've never actually made anything worthwhile, and you could have really made a nice bridge that actually works, you know? So that's what I got to say about FOMO. Emotional discipline in trading. This is extremely important, like everything else, but this one is especially important when it comes to different emotions like greed, fear, and overconfidence. So, for example, if you're super fearful, you aren't going to take the trades that you like, follow your strategy. You see something, you're like, oh my God, this looks like a good setup, but I'm fearful, I'm scared, I don't know what's gonna happen. Then that can make you miss out on some really, really great opportunities. And something that I really like using is like when people are fearful, that's when I'm excited, because I'm like, okay, people are fearful, the market's going down, like like panic selling, and I love it, because that's when it's my time to shine. It's my time to get into the market, is when people are fearful. Honestly, it's the best time to get into the market. Um, because you're going against the grain. You're going against the 90% of people that are losing, and that's why it works so well. You're literally using human psychology against other people, and institutions do the exact same thing. So why wouldn't you do it also? And you have to be emotionally disciplined to do this. But yeah, if you're fearful, it's going to be extremely, extremely hard for you in this market. And that's really all I have to say about being fearful. But the next one is greed. If you're greedy, you're literally just going to be like over trading, taking way too much excessive risk, and and it's just chasing bigger profits. You're going to be like, oh my God, this one's going to go to the moon. This one's going to sky. Like a lot of people lost money during like 2020 and 2021, like when GameStop, and there was another one, I forgot what it was. But anyways, like there was a trader that turned like, I don't know, $1,000 into like almost $1 million or something like that, trading GameStop. And they're like, oh no, I'm just gonna hold it. I'm just gonna hold it. And then they lost it all. They literally lost it all. Like you turned a couple $1,000 into almost $1 million, and then you just lost it all because you got greedy. Like it happens all the time in this market, and this market is not forgiving. So you just can't be over greedy, and that kind of goes with the second one, which is like being overconfident and taking excessive risk, thinking, oh, I can't miss this trade or I can't lose this trade. Like the market is Very, very difficult to predict, and you have to remain humble through it all, even if you're losing and even if you're winning. You just really have to keep a like a stable kind of mindset around it, or like a mentality. You can't get too your highs can't be too high and your lows can't be too low. You just have to kind of keep it right here, if that makes sense. Um, because that's just trading, right? Like just having emotional discipline in general, like even outside of trading, is extremely helpful and beneficial to you. So why not bring that into trading and take advantage of everybody else's psychology and everybody else's emotions and use it to your advantage? So that's probably one of the biggest things, because institutions do it, so why wouldn't you do it? Make sure that you guys are being emotionally disciplined when it comes to trading.